Hey, good morning. Let's go over today's trade plan. So we saw in the overnight session that ES gapped up and the test above Friday's regular trading hour high resulted in responsive sellers stepping in the market, and from there ES has simply been balancing within a range. Heading into the open, we know that typically after a strong sell-off, we do see responsive sellers active on any bounces back up into resistance, and at this point, the nearest short-term inflection point is the 87.50 to 89.50 pre-market resistance zone, and that's still an area where sellers can be active. On the downside, we have pre-market support 79.75 to 81.75. It's not really a major support area, and we have the gap right below at 78.50. So that's not an area where we want to be aggressively long unless there are very clear-cut signs that there is just a lot of strength, a lot of underlying strength in this market. So for example, if we go down towards the gap fill and the advanced decline line is still at plus 5 or 600, that would be an indication that there is a lot of broad market strength and perhaps we're not going to go much lower. Below that, the main inflection point is 73.5 to 75.5, and the expectation is for buyers to defend that zone on first test. The overall expectation on the day is for a balanced type session where any moves higher into resistance attract responsive sellers and any dips back down into support attract buyers, and the market pretty much balances within a range, and it's a two-sided day. So with that context in mind, we're going to be careful on trading on the long side on any breakouts this morning. Again, unless there are very clear-cut signs that like the NYC tick is holding above zero, the AD line is extremely positive, then perhaps we can consider some aggressive longs. But in any other scenario, it makes sense to be cautious on entering long at any aggressive price. And if anything, it's better to focus on the short side near resistance up here and then look for a move back down into pre-market support, the gap fill, and the initial support zone, and then look for a long setup for a move back up towards the 85, 86 area and 87.50, 89.50. On the upside, if we do continue balancing up here near pre-market resistance on strong internals and the other markets holding up, a breakout above 89.50, we have immediate resistance at 91.92, but the major inflection point on the upside above 87.50, 89.50 is 96 to 98.5. And that's pretty much an automatic sell in most scenarios. That's very decent resistance. It's near the top of the range where the sell-off started in the overnight session from Friday, and the expectation is for rejection at initial resistance on first test. So in the event that we continue holding up here and then break out to the upside, 96, 98.5 is an area that can cap the upside and shut off the selling and then result in a pullback back down towards 87.50 to 89.50 and potentially even lower. So that's the upside idea in the event of a breakout. But right now, we have to keep in mind the market does not have to break out above 89.50. We may just actually reject and fail here and go back down to 79.75 to 81.75, gap fill at 78.5. That's still an area where buyers technically can be active, but again, we'll have to see if there's any disconnect in the underlying internals or if there is, just a lack of momentum heading into it. So that's a real-time read. 73.50, 75.50, good trade location for buyers to step in. And again, the expectation is that buyers will defend that area. Below that, we have support 71.25, and then the balance area low at 64.5 to 67.5. But if this market is as strong as it has been in the overnight session, then we should not see a move all the way back down to 64.5 to 67.5. So even in the event of some strong selling today on the day time frame, the 71 area should hold, and ideally the 73.50 to 75.50 holds. So those are really the main thoughts heading into the open. Again, the main focus is going to be on fade setups today, and we're going to be cautious on any directional moves, trading breakouts or breakdowns, because, given the current context, it's unlikely that we're going to get a sustained breakout or a sustained breakdown from the overnight range. Most likely, any break will attract buyers on the downside, and on the upside, 96 to 98.5 is probably the cap, and sellers can be active there, and technically even at 91, 92, but that zone calls for caution because it's right above the overnight high, so we have to be careful at 91, 92. So right now, that's really the primary scenario. Looking for a two-sided market, a balanced session, sellers active at resistance, buyers active at support, and just really filling in this 81, 82 area, which has been a low volume area over the last several days. And the idea today is that if we continue balancing, then perhaps we can simply build some volume over here around this pre-market support zone and just kind of balance within a wider range. And then depending on how today plays out, we'll have a better idea on where this market's headed. If you're looking at the other markets in TF, keep an eye on 57 to 58. If we get a breakout above 57, 58, that would support the possibility for a breakout in the S&P as well. So those are our main thoughts. Let's see whether sellers can be active at pre-market resistance this morning, and we'll take it from there.